Happy New Month and welcome back to another episode of my weekend market analysis series. It's time to revisit the gold market dynamics in preparation for the incoming week. As we wrap up the month of August, it's clear that last week's trading session was all about a consolidation, with markets struggling to break free as price action was caught within the 2,500 and the 2,525 range bound structure. As you will see here on your screen, this was actually our trading setup prior to the beginning of last week, as you will see. And of course, we had a couple of parameters that were supposed to be guiding our trading decisions. One of which was the ascending trend line, of course. And you know how we treat our ascending trend lines. As long as price remains above them, we'll continue to look out for buying ideas. Then, in addition to the ascending trend line, was our key level, which was duly situated at the 2,495. And of course, at the beginning of the week, we had a couple of buy positions we saw here during the first half of the week, and of course, during the midweek, we had a couple of buy positions we did not do very well, giving us a couple of losses before we took this bullish move on Thursday. And of course, even on the final day, recovery attempts were shut down thanks to a surge in US Treasury bond yield following the core PCE report. For educational purposes, you can find a detailed breakdown of each of our entry points in the description box below. Moving forward, gold might have closed lower, but it's still showing signs of some strong support around the $2,500 area, which has been peculiar through the course of last week's trading session. And of course, with the Fed's likely to start easing monetary policy soon, all eyes will be on the size of the first rate cut. And with the non-farm payroll report coming up next Friday, we are set for a week that could either launch gold higher or throw some serious headwinds in its way. In this video, we will be breaking down the charts, identifying major trends, key levels, and explore structural patterns to help us prepare for the week ahead. So stick around with me as we map out our plans together to catch the big moves that are likely to unfold. Remember, this presentation is designed basically for educational purposes only and not financial advice. Trading involves risk, so always consult a financial advisor before making any investment decisions. With that said, let's dive right into the business. So, as usual, our first point of contact will be on the daily time frame, but nothing really has happened here as the structure we are looking at in the last 3 weeks still remains the same as price action after taking into account the character of price action since the month of March has been confined within an ascending channel, as you will see here. Connecting the series of higher highs, we have the resistance line of the ascending channel, and when connecting the series of higher lows, we have the support line. Now, something interesting is happening in this market right now. As you will see, in the last 2 weeks, we can see how price action had continued to retest the resistant line of that ascending channel, which is a beautiful signal that there is an indecision going on around this area where price is struggling to either break out of that structure to welcome more buying opportunities or probably respect it one more time to incite a sell-off back into the support line of the ascending channel. So you would agree with me that we are at a crucial juncture in this market where this area is going to be a make or break, determining whether price will go up or go to the downside. Now, in order to navigate this current structure, I have a simple trading setup on the 4 hours time frame which we are going to be using. However, before we take a closer look at the 4 hours time frame, let's turn our focus to the upcoming economic events that will be shaping the sentiment in the market next week. By reviewing the economic calendar, we can pinpoint how this upcoming event will shape price action, helping us spot potential correlations with specific technical patterns on the chart and better time our positions more effectively. Now, based on the asset we are looking at for this week, we are going to be focusing on high impactful event from the United States economic docket. Now, before I go in here, it's important to note that on Monday, September 2nd, is a public holiday in the United States, which may likely bring some low liquidity in the market due to the absence of our US counterpart traders. Now, on Tuesday, September 3rd, is the ISM Manufacturing PMI, a key economic indicator that measures the health of the manufacturing sector in the United States. Then on Thursday, September 5, we are looking at the ADP Employment Change, which is a monthly economic report that provides the number of new jobs added in the United States private sector every month. Now, on that same day, we will be looking at the ISM Services PMI, which is a data that also gives us an insight, let me say, that measures the performance and expectations of the service sector in the United States. Now, fast forward to Friday, that is September 6th, we are going to be looking at the average hourly earnings, which measures the change in pay for workers in the United States, and it is a key indicator of inflation. Now, if wages are rising quickly, it could lead to higher inflation, prompting the Federal Reserve to maintain or raise interest rates, which often strengthen the US dollar. Now, simultaneously on that day is the almighty non-farm payroll, which is what everyone in the market will be looking forward to, a key economic indicator that shows how many jobs were added or lost in the United States economy, of course, excluding the farming sector. So these are the impactful event we are looking forward to next week. And of course, we all know that the anticipation of this event has its way of influencing the sentiment in the market, which will reflect on the charts as price action. Now, talking about price action, let's scale down into the 4 hours time frame, which is going to be our execution time frame. Now, right here on the 4 hours time frame, all I did here was to take into account the character of price action since the beginning of the month of August. And what you're seeing right here is a snapshot of that structure. Now, taking this into account, the first thing you would observe here is that throughout the course of the month of August, the market has been on an uptrend, and the connection of the series of higher lows here further emphasize the strength of the buyers. In fact, I have a couple of them that will be helping us navigate this market dynamic next week. And you know how we use our trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying. And we will not be considering selling unless the ascending trend line is breached and broken to the downside. Now, to further help us guide our trading decisions next week is my key level, which is duly situated at the psychological area. That is the $2,500 price level, as you will see here. This level, in fact, has been a significant support line through the course of the last couple of weeks in this market. As you will see, during the mid-month of August, you can see how this level had been a strong demand zone. We saw it happen here again, only for this 22nd of August, where we saw a breakdown of structure, but this didn't last long as price action came back above that structure, maintaining its stance above the ascending trend line and of course the $2,500 area to make this area a robust demand zone to work with ahead of next week. And in fact, following the US core PCE yesterday, sorry, on Friday, we saw price come back into that structure, and immediately it test that structure. We saw what happened. Buy pressure resumed again from that particular area. Now, as you will see, we are at a crucial juncture right now where price action, interestingly, is sitting on the 2500 and, of course, the ascending trend line. Now, the question here is, will price respect the ascending trend line, where I will continue to look out for buying opportunities to continue the uptrend move? And in fact, if we look at the distance between the key level and that resistance line, it's about 300 pips to catch. And in fact, if price action goes on to further break out of that record high, then we look out for more opportunities to buy. The other scenario here is if price action breaches the ascending trend line, breaks to the downside, and the key level where continuous selling pressure below the structure will be all we need to join a decline from that point. So we are at a crucial juncture here. Trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring the character of price action around this particular confluence. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me, and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market prep, and of course, financial updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.